Welcome back to Explain the Charts. Today is January 8th, 2025, and we're going to be analyzing the USDCAD pair. Recent news suggests continued weakness in the Canadian dollar due to political uncertainty and trade-related developments. The US dollar, however, is finding support from a hawkish policy shift by the Federal Reserve. Let's take a look at the daily chart to establish an overview of the trend. Here on the daily chart, we see a clear downward trend in the price of USDCAD in recent weeks, with several instances of lower lows and lower highs. The price action is demonstrating a bearish market sentiment. However, there seems to be some support forming around the 1.35 level, which may be a good opportunity to buy at this point. It's interesting to note how the price reacted to the news about the political uncertainty in Canada. In contrast, we see the impact of hawkish policy shift by the Federal Reserve on the US dollar. Let's zoom in and examine the 1-hour chart, focusing on the last 24 hours. Looking at the last 24 hours on the 1-hour chart shows a clear downward trend, with the price action demonstrating a bearish market sentiment. Now, let's switch to the 15-minute chart to get a more granular view of the recent price action. Here, we can observe a clear downward trend in the price, which has broken through a major support level around 1.4360. This is further reinforced by the negative volume. The price action is consistent with the daily and hourly charts, indicating a bearish market sentiment. Based on our comprehensive analysis of the USDCAD pair across different timeframes, we observe a prevailing bearish trend. Several key support levels have been broken, and the current price is testing a critical support level around 1.34. While there is the potential for a bounce, it seems more likely that the bearish trend will continue, at least in the short term. A breakout above 1.40 would indicate a reversal of the bearish trend and reinforce the bullish predictions. However, a sustained break below the 1.34 support level could accelerate the downward movement, leading to further price declines. In the long term, the outlook for USDCAD remains uncertain, but the current bearish trend suggests a cautious approach. It's advisable to monitor the economic indicators and news closely. This analysis is for educational purposes only and should not be considered financial advice. To recap, we identified key support levels at 1.34, 1.35, and 1.40. We predict a continuation of the bearish trend in the short term, with a 60% likelihood. The bullish prediction has a 40% likelihood, which would be reinforced by a breakout above 1.40. Keep an eye on the political and trade-related developments in Canada and the Federal Reserve's policy shifts for any potential turning points in the market.